As world financial and economic conditions deteriorate fast, developing countries can expect a sharp and abrupt decline in growth this year. In its Global Economic Prospects Update, the World Bank predicts GDP growth in the developing world will slow to 2.1%, which will have a big impact on the poorest people.
You have to remember for developing countries that this is the third crisis that they've seen in succession. First it was the energy crisis, and it was the food price hike, which really got countries off pretty adversely. After they'd had adjusted to those situations, now we're going into a financial and economic crisis.
The poor in Eastern Europe and Central Asia will be severely affected by the downturn. The biggest drop in growth is forecast there. Lower growth in 2009 is predicted for Latin America, Asia, and Sub-Saharan Africa, too. The Middle East and North Africa are the least hard hit for now. But globally, world output is expected to show its first decline since World War II, with wide-ranging effects for both developed and developing countries.
We've seen really unprecedented declines in production, in trade, in investment across both sets of countries so far this year. And it has been surprising for most analysts the depths to which these changes have occurred.
As investments and capital slow, developing countries will have more difficulties repaying loans.
There's a concern out there that they won't be able to refinance many of these expenditures. And there's a real need in the system to have more support by international financial institutions. And we hope that the G20 has a healthy debate on this issue and comes to the support of many of the poorest countries out there.
The World Bank predicts a weak global economic recovery in 2010, but says the conditions of recession will persist through 2011, adding the pace and timing of the recovery is still highly uncertain.